Okay, well, welcome everyone. We're going to dive in here. This is the first Operate session of the year. So kicking us off is our Senior Vice President and Analytics and Chief Economist, Jamie Lane from AirDNA. So Jamie's going to be here. We're going to really set the stage for Operate. Take a look at some of the main key benchmarks, trends of what we're seeing in the industry. So the chat is open, Q&A is open. Please pop in where you're joining us from. Don't hold back on questions. We'll have some time at the end of Jamie's presentation to go through things for everyone. And then make sure to check out that resources tab. We've got some links there for you, free downloads, anything that you might need. And at the end of today's session, you'll receive an email with a copy to the slides for you to download the deck. So Jamie, again, thank you so much for being here. Thanks everyone for joining Operate, and I'll let you dive right in.
Awesome. I'm going to go ahead and share my screen, assuming it's up and looking good. We'll jump in. So the sort of outline today of what we're going to go through, try to stick to around 30 minutes. We're going to look at sort of the tariffs and uncertainty that we're sort of living in now. The current administration calling it strategic uncertainty, and we'll see what that strategic uncertainty is doing to travel demand at the moment, what we're seeing in terms of recent performance, the summer outlook, and then I'll walk through everyone and how we see benchmarking like the best. So we'll do sort of a live benchmarking exercise, which I think will be very informative to everyone. But wanted to start with what this uncertainty that we're seeing right now looks like. What we see in this blue line is uncertainty measured over time, past 30 years or so. So you see, and what this sort of is measured by is an uncertainty in the news, economic sort of policy uncertainty, tax code changes, and forecaster disagreement in the outlook. And essentially what we have right now is all-time highs in terms of uncertainty. You see, and what happened during 9/11, the start of the Gulf War, the financial crisis in 2008 with Lehman Brothers and TARP, debt ceiling dispute in 2012, 2013, sort of the first government shutdown, sort of looks a little quaint compared to what we see now. And the first election of President Trump and absolutely raised uncertainty in the market. The second election of Trump actually added similar levels of uncertainty. COVID was really unprecedented times back in 2020. And now we've really surpassed that, which just makes it tough for a lot of business leaders, a lot of consumers to get a sense of what they're going to be paying for certain things going forward. And that has led to a massive decrease in consumer confidence. And what we'll talk through is what we're seeing that consumer confidence hit means on travel, what the tariffs have sort of meant for international travel, and what our outlook is. Because with all the doom and gloom that I've started with, things are actually looking pretty good. So don't want to sort of scare people away that this is going to be all doom and gloom. Overall travel, at least domestic travel, is actually holding up pretty well. But let's look at it. And wanted to start with just what we heard from a lot of the public companies that have reported over the past month in terms of what they're seeing. So Delta and Southwest Airlines both called out that premium cabins are seeing things pretty going very well, but they're starting to see cracks in demand weakened especially in leisure demand. In us being in the leisure demand sector, that worries me. Then what we saw from Airbnb and Booking, and they called out weaker bookings for longer lead time stays. They called out a pullback in international inbound to the U.S. And some sort of cutting back in terms of length of stays from Booking.com. What are we seeing actually in the data from stays from international inbound? Actually, global international inbound to the US. And we did see a dip in March We did see a subsequent rebound in April. A lot of that was from Easter, sort of shifting around. But from Canada to the US, we have seen sustained declines. Short-term rental demand, this chart is down about 15% year over year. So that's from stays from Canadians staying in the US. And then from Statistics Canada, they do track Canadians leaving, coming back, Americans coming in, coming back. And what they're seeing is trips by air down about 30%, and car are by air down about 20%, by car down about 30%. So pretty big overall declines, but Canadians are actually seeing their travel up 10%. So where are Canadians going to? I find this fascinating. And look at the sort of share changes. Yes, I'm sort of trading out of the US. We're seeing a whole lot of Canadians staying domestic. We're seeing a whole lot more Canadians traveling to France, Mexico, and the biggest gainer is actually Japan, of seeing Canadians travel there. And a big factor there has been the weakening Japanese currency, which has made it very attractive for both Americans and Canadians to travel to Japan. So, which markets might be impacted most by declines in international travel? What I've called out here is looking at some of the top vacation rental markets. So, left-hand side are ones most exposed, and I've sort of ranked them by 2024 share of demand coming from international guests. So, you got to look at a market like Orlando. Almost 30% of guests were coming from international locations. Adirondacks, a market up in upstate New York, very dependent on Canadian travelers. 13% of demand coming from international travelers. And what we've seen so far in the first quarter is they typically see about 11.5% of their demand coming from international travelers. That's now dropped below 10%. So something that we're absolutely watching and keeping an eye on is sort of any subsequent weakness in these markets that are most dependent on international travel. If you're in the market to the right, you have nothing to worry about for international guests because essentially none of your demand is coming from international travelers. So if you're in Broken Bow Lake, the Ozark Mountains, or the North Georgia Mountains where I have a property, essentially, almost none of the demand's coming from international guests. You're very much focused on domestic guests. So something you may be interested in, though, is how strong the dollar is relative to the euro, because this could have a big factor for this summer of what share of US travelers decide to travel overseas versus stay in the US. And what we had seen in this sort of green line, strong relative to recent history. And what that means is that your dollar goes farther and essentially it puts Europe on sale. What we've seen the past few weeks is this green line come way down. And what that means is that Europe's getting a bit more expensive, the dollar's depreciating, and that could have the impact of causing a few more people or a larger percentage of people to stay domestic and save that European trip for another time. What we're seeing so far, though, is in US Americans traveling to Europe, traveling overseas is about up 5% year over year. That is down from growing about 10% last year, but not an actual decrease yet. So something we're watching. I expect it to be flat to slightly positive. I don't expect us to see any pullback in Americans traveling overseas this summer if sort of exchange rates stay at their current level. So looking at current performance, looking high level at supply growth, we do see overall listings sort of leveling out, about 1.6 million listings on Airbnb, Vrbo, Booking.com, unique listings this year And you see it very much sort of flattening out of growth. And then when we look at the year-over-year change in supply, say you go back to 2022, we were seeing like 20%, 25% growth. And that what was leading to a lot of occupancy declines, weakening performance throughout 2023 into 2024. But now we're at a much more sustainable. This is actually what makes me feel pretty confident about our outlook is that supply is just only growing 4%. So if you're already in the market, already operating, you're not going to see a whole lot of new competition coming in. And in a lot of our coastal mountain markets, we're seeing supply actually flat. So not a whole lot of new competition, and that does sort of bode well for the uncertain environment that we're in. Because if we are seeing a whole lot of uncertainty at the same time um, as a whole lot of new supply coming in, that would make me feel much less confident about our summer outlook. And then on the demand side, so this looks at both year-over-year change in demand nights in blue. So that's based on the month that someone's staying. And then book nights in green. That's based on the month someone is actually making that booking. And essentially, a lot of the near-term volatility has been around sort of the Easter shift. So weak demand growth in March, very strong demand growth in April. Was Easter sort of spring break moving in between months. We did see pretty significant occupancy declines in March, occupancy gains in April. We expect it to be flat to slightly negative going forward, and we'll look at that in a bit at our summer outlook. But here's sort of you can put into context overall occupancy levels, so there's percent of overall nights getting booked, and putting them sort of in context of the past couple of years by month and going back to 2019. So we're at least have been in January, February, right in line with 2019 levels, a little bit below in April or in March and April. But we expect and we have seen sort of occupancies generally in line, albeit slightly below 2019 levels, but above what we're seeing generally in 2024. So, what does the outlook look like for the summer? So, what we've done is we've sort of benchmarked against some of the key ways that we're seeing industry performance sort of bifurcate. And the first one is by location type. So this is one of the biggest ways that we're seeing performance sort of differ as we look out to summer performance. So the coastal mountain sort of traditional vacation rental markets, we're seeing occupancy sort of flat to slightly positive for this summer. So that's and really the and U.S. traveler sort of making summer plans. It does look good, at least sort of the beach and mountain destinations. Where we're seeing real weakness, especially as we look further out into July and August, is in the larger cities. So this is like the top 50 major metro areas like Atlanta, Dallas, Los Angeles, New York, Chicago, Boston. These areas have a heavy dependence on international travel, and we're seeing some real weakness there. And then even on small and mid-sized cities, we're seeing occupancy declines, and these are areas where initially, when I called out that supply was pretty weak across the country, small and mid-sized cities is where we still see significant growth in supply, and demand is just not keeping up. So I think here it's markets like Chattanooga or Birmingham. You get in the Midwest like a Des Moines or Indianapolis. So not quite top 50 metros, but some of the smaller metros where we're seeing weakening performance. And then the other way that we're really seeing performance bifurcate is at the price tier level. So those properties in the highest price tiers. So how we define this is top 20% of ADRs by market, by bedroom size. So you think like in the Atlanta market, looked at all the rates for 4-bedroom properties. We'd put the top 20% for bedrooms in the Atlanta market as luxury, the bottom 20% in budget. And then when we aggregate everything up across the country and look at forward pacing for the summer, essentially what we're seeing is people that typically book or properties that are in the budget and economy segments. We're seeing pacing pretty weak this summer, and this really aligns with what we heard from the airlines. This aligns with what we heard from Airbnb and Booking.com, that they're seeing lower end leisure travelers sort of pull back in summer bookings, or at least shorten the lead times that they're willing to make that decision. So this could just be a pause in bookings, not yet that people have actually stopped booking. So we'll, and I'll show you some of that in a second. But on the higher end, the nicer properties, fully amenitized near lakes on the beach, are actually doing relatively well, and we're seeing pacing up this summer. I talked about sort of lead times. This looks at a year-over-year change in the median lead time by price tier. And essentially on the bottom here, budget, we're seeing lead times really shorten. So guests are just waiting much closer to that stay date to make a decision on whether they're going to take the trip. So far, we've seen them make the trip. We've seen demand stay positive, but they're just waiting as long as they can. And that's generally what we see happen with rising uncertainty. If people can wait to make a decision, make sure they have the budget, make sure they retain their job, they're waiting. And that's what's showing up in the data. Also showing sort of pacing by market, sort of pulled out the top 50 largest vacation rental, short-term rental markets across the US. You see some areas actually doing relatively well. Cape Cod, Lake Tahoe, Panama City, Fort Walton Beach. We're seeing pacings up. And then it sort of called out some of the larger cities, Sarasota, Coachella Valley, Boston, Oahu, New York, Austin, Houston, Nashville, all seeing weakening occupancy. So, and then you see that sort of play out into and what I sort of called out sort of lower lead times compared to both the pre-COVID and compared to what we were seeing in 2022. So that's what we're seeing really across the country in terms of trends. What I'd like to call out though is all trends are local, and it really is important to take a much more localized view when benchmarking. So what I want to do is actually jump in and actually be able to show you how I think I'm the best are benchmarking. And I'm going to take you through 3 different levels of potential benchmarking, 1 at the property level, 2 at the property manager level, and then 3 looking out into the future. So let's start with property level benchmarking. So I'm going to go into the new section of AirDNA called custom comps, and I'm just going to go create a new comp set. So we are going to give an example of my property in North Georgia. It's near Okie Mountain. So I'm going to name it Okie Mountain Comps. Go to continue. I'm going to select my own comps, but you could start with our sort of recommendations around comps. I'm going to go into Clarksville, North Georgia, hit continue. And then what I'm going to start with is a list of all the properties in Clarksville. Not all of these are going to be sort of comparable to me. So what I can start doing is refining my benchmarks. So I want to look at other sort of 5 to 6 bedroom properties. I want them to be only entire home. I do want single family homes as my comps. So I can apply that. You see the number reduced dramatically. I then really care about amenities too. My property has a hot tub. So I only want to compare myself against properties that have a hot tub and it doesn't have a pool. So I know pools can really distort performance. So I want to get rid of those as well. Um, and then I get down to a much smaller set. And then what's also fun is I can sort of zoom into the map. And now I'm seeing properties that are in that sort of view, either on the left, and then I can look at each property as well. So let's say I want to evaluate whether this property is actually good for my comp. I can look at it, look at the photos, be like, all right, this property is great. So now I'm going to add it to my comp set and I can just click on the add and you see it come up to the top. And I can go through and actually create this set of comps that I think is comparable to my property. And as I add them in, you'll see the color of them change from pink to blue. I can then save my comp set, go to my comp set list. Now I see my new comp set showing up here. And now here I can actually get into benchmarking data. So now that I've set this list, I can see how they're performing over the past 12 months. But I think much more importantly is I can get a real-time update on how each of these properties has been performing in recent history, both on occupancy, ADR, and RevPAR. Now, as a property manager and as a potential investor, a lot of times I want to see what is actually the opportunity, not just the comps that I think are comparable, but what is the actual opportunity to find the best performing properties so we can create multiple comp sets. So let's say I really want to go in and see what are the attributes of the best performing properties and how they're performing. So I can look at, and I could sort by revenue, I could sort by occupancy, I can sort by ADR. So maybe I care about and what are the properties doing that are generating the highest ADRs. I can add them to a new set. So Okie Mountain Best, um, and then go through and create these different comparison views. So now I've created a new comp set around Okie Mountain Best. And then I could go into my comp sets and see what is the performance, what are these properties look like, what are the attributes of those properties, and be able to benchmark those, which is can be really helpful in terms of understanding what is the opportunity set for me to improve my property performance. Now, the other way to benchmark, and now this one is maybe a bit more relevant to some of the property managers out there, is let's say I'm operating in North Georgia. I've got maybe a mid-sized property management company. So now I want to know what are the other property managers out there that look similar to me in terms of where they're operating and the number of unit size. So I can actually go into AirDNA. I can see which property managers are out there. So Cabin Rentals of Helen, Georgia Mountain Rentals, such as Vacation Rentals. And I could actually track the performance of each of these property managers and give different benchmarks there. So I can go in and filter and I can create different filter sets based on these property managers. So let's say I want to look at such as vacation rentals. I can hit apply. I can now do a new save. So I'm going to do such as vacation rentals, North Georgia. And now I have the ability to track such as relative to either me or relative to the market. So let's say I'm going to get rid of the filter for such as now. And now I want to add that saved filter I created for such as his performance. So I can look at their performance relative to the market. What I really care about, because they're competing directly with me, is how have they been adding supply over time? So that just last year they were at about 40 properties. Now they're up to 70. And now I want to get a sense of what type of properties they've actually been adding in over the past year. So I can look at trailing 12 listings. And now go back and add that filter, such as, and this is going to give me a very detailed view of not only what their current inventory is in the breakdown. So they're mostly budget and economy 1 and 2 bedrooms. Um, but I can also go all the way back through time, look at their occupancy, look at their ADR, go in and look at their sort of set of listings they have, where they're actually operating in the market, and see where I'm maybe missing in my strategy, where they sort of adding the properties in, and I think also really importantly where they're seeing outsize or under performance. So that gives me property manager benchmarking. And then the other opportunity I have is looking at forward benchmarking for my properties that I'm operating. So I can actually compare myself, connecting my listing in here, looking at my forward demand versus my market, my comp set, or my submarket. So I can see in green shaded the nights that I'm booked. I can see demand for my market. So I can see generally I'm getting booked when others are as well. There are some periods here. So in June, I don't have a booking where I see there is strong demand. So now I can slide down here. I can look at the sort of range of rates in black line is where I'm at. The dotted line is the median. And then I can also look at sort of the range of my competition. So I said on February 26th, 27th, and 28th, I'm not booked when it looks like most of the market is. I can then see here, I'm actually well outside of the range for other competition in my market on that date. So that may be times when I'm pricing a little aggressive. I'm given my risk tolerance. I actually like being aggressive this far out, but as I get closer in, I might want to adjust my bookings down or my rates down to be more competitive. So this really lets you sort of dial in on your rates, and then you can also go in and actually look at a competitor by competitor basis. So I could go into that view. I've sort of select the properties I'm competing with. Now I want to go forward into June so you can see all the bookings that I have. So I've got Lydia, Jessica, Nicole coming up, but I've got this period here when I'm not booked, and I want to see how the market actually is pricing in that night, um, and how I might want to increase or decrease accordingly. So that gives me great ways to benchmark not only sort of pacing going forward, but actually on an individual nightly basis by property. So whole different ways to sort of set up different pacing. So with that, happy to take a few questions or whatever you want to do.
Thank you, Jamie. That was awesome. I actually had one direct message just once you showed the platform asking
Mhm.
about pricing. They only have a few units as well. So kind of is there tiered pricing? What does AirDNA offer if it's a smaller operator?
Yeah, so and just about everything I showed on the property level sort of benchmarking and forward pacing, all that sort of stuff is part of our pro tier. It's 125 a month or $400 for a year. So very affordable for the small operator 1 to 4 listings to get great comp set data. both historically, building out comps, and getting forward data so you can connect your listing, select your comps, and get the forward rate. So that's all included with our pro tier subscription.
Awesome. And then the other question that came in was from a property management company. So, looking at the three different styles of data, you would suggest kind of that second option for property managers, that sort of style, that would be the most valuable for them using AirDNA.
Yeah, so with property managers, and that is our property manager tier, so where you can benchmark yourself versus your competition. That sort of scales based on your unit size. But it's a bit more, but it definitely gives you much more visibility into overall performance in your market, property level performance, and competitor level performance.
Yeah, that makes sense. And then a question here from Rachel. I know the answer, but they're from Aruba. They're wondering if there's any data collected for the Caribbean.
Yes. So the AirDNA platform is global. So everything I just showed for the US, you're able to get for Aruba, you're able to get for any single market around the world. And so we're tracking property managers, we're tracking every single listing. So you can do all of this for any market around the world.
Awesome. Yeah, I know there's a couple people on the Australian side that had registered for this, so I think they're pretty interested because it's still fairly new concept
Yeah,
overall.
and yeah, every single data point I showed is like tracking occupancy, tracking top markets, looking at all that is all really available for at the country level with our sort of property manager tier at our or at a market level with our pro tier.
That's awesome. If anybody else has any other questions, please pop them in now. Jamie, your slide about Canada resonated a little bit. Being on the Vancouver side myself, Japan is top of the list. I think I read from booking somewhere that it's the cheapest year to visit. So you got to go now. Um, and I
Yep,
mean, I've had friends, they were going to Hawaii, now they're going to Mexico, or they're kind of skipping through the US to a certain degree. So definitely seen that trend more just in conversations with friends. So interested to see how that continues for sure.
absolutely.
Yeah.
Yeah, and maybe the what next White Lotus might be in Japan.
Yeah, there you go. And then everybody will go.
Yeah,
Yeah, we're definitely easily influenced when it comes to that for sure.
yeah.
Awesome. Okay, well, Jamie, thank you so much. We're gonna wrap up here. If anyone has extra questions, feel free to send them over. You'll get the slides, you'll get a link to this recording. We'll follow up with an email, a little bit more information about AirDNA, Jamie and the team. And again, Jamie, thank you so much for your time. This is really relevant going into the summer, so we really appreciate seeing the predictions as well.
Awesome. Thank you so much for having
Awesome.
me. It was a
Thanks.
blast.
Take
Bye.
care, everyone. Bye.